Hello, everybody, and welcome to today's episode of Trade the Chain. I am joined by Doug the Everyman DeRosa, Everyday Man DeRosa, and Nick Mancini, Trade the Chain's Director of Research and Chief Community Officer. And that's a reverb on my side. Sorry about that. Wow. Okay, so we have a pretty cool episode when it comes to news today, that's for sure, and some excitement in the market. The first thing I want to do is head on over to the Trade the Chain dashboard real quick. Take a look at what's happening on the macro side. We have total market cap at 1 trillion 0.04. Still market neutral for daily sentiment for the overall crypto markets, 54 out of 100. Bitcoin is bearish at 21 out of 100. And you can see Mithril topping the hottest on Twitter over the last 24 hours. Up 329% and a 46% gain. I can't believe I missed that, Nick. Let's see, nothing really exciting out of the rest of the group there. But BTC is showing the most bearish coins by daily sentiment, which is very interesting. It rarely gets to that position on the charts. Moving across to the coin screener page, you can see it's a mix up or down, but by very little over the last 1 hour. So nothing horrific happening, although I do hear from some of my colleagues on the show that they're making out on some scalps on shorts. That being said, I do want to go over to the sentiment chart on BTC real quick, because as you could see, something crazy happened yesterday. And I like to admit my mistakes publicly. And I won't drag anybody else in here with me, Nick. But yesterday we were setting up for we had Tesla earnings at the end of the day after hours, and we were setting up. We called some TradFi analysts. We were trying to get conviction on a position to go long based on Tesla meeting or beating expectations on the earnings, and it reflecting over to the crypto markets, particularly in Bitcoin. Well, we did get the intel that they were going to at least meet expectations, and so we got excited and we put in our long positions on Bitcoin to get a nice, I don't know, maybe we were going to be in there 30 minutes to 60 minutes, get a nice pump and scalp. But then something dramatic happened. They met the streets estimates.
Beat.
But then it was followed by Elon Musk saying we sold $1 billion in Bitcoin. And of course, that's where this dump comes in right here. You could see this right before the 4:30 hour yesterday, and it took a massive crap in the bowl. This thing was bad. And so we got out of our shorts. We didn't make any money, to say the least. But yeah, that's what happens. You can never tell what side balls you're going to get hit with. So interesting times, guys. Interesting times. But I'm going to leave it to you, Nick, to take us into the markets now and tell us what is happening.
Yeah. So thank you for prepping with the Tesla scenario. For risk, we have to understand that risk is equities and crypto right now in one umbrella. There's obviously some others, but with Tesla, the expectation of a meet or beat, risk should have moved higher. And you'll actually see, equities, very much appreciated the Tesla earnings, but crypto, obviously, with the Bitcoin sale, I think it was $1 billion. And it was right around, I think, estimates between 29 and 31K average for the sale, which was right before we capitulated to 17.5K. So just for the people following along for market context, during that consolidation, we saw prior to 17.5, and I'll actually pull it up here to give a bit better perspective. But the consolidation that we saw right here was likely Tesla selling. This could have been Tesla, finally getting rid of everything. This was likely, obviously, helped by 3AC and Celsius and everything else along with that. But based on estimates, this is when Tesla sold. For anyone thinking, you have to understand the full macro context. We don't know when they're going to buy in. They still have 25% of their original Bitcoin holdings. So, they're still a holder, still a relative believer, but do they capitulate lower? Are they looking, would they like to sell back at this level? Should we meet it? These are things that we're going to have to consider moving forward as we assess the macro picture. We've still got, big companies like MicroStrategy, Tesla, El Salvador holding many with cost basis around 30K. 30K, I believe, is the cost basis of MicroStrategy. El Salvador was buying up here as well. Do they get rid of it, when they break even to free up liquidity? Who knows? That's things that we're going to have to assess and understand moving forward. So as to where we are right now, I've got a lot of tricky lines in the chart, so I'll try to explain that quickly. This is our previous trend that we've been trading in. We obviously poked out. We're back in it, so it's still valid in terms of acting as resistance. We broke the downtrend that we started yesterday morning. Coincidentally, just about 24 hours later, we broke higher. Typically, you would expect RSI to likely reset and things to continue to move. We did get tweezers right here. We've talked about this before. This is not, it needs a confirmation to be confirmed as bearish. But we are very much, we're sitting in this gap between the 50 and 100-day moving average, which is going to create some interesting market dynamics. We're likely to consolidate here for a big move, probably higher or lower, and that'll probably coincide with the S&P 500, which we've been saying in the Trade the Chain group. If this continues higher, crypto should follow. We have not seen a full decorrelation yet, although the correlation has been slightly coming down. It's still very much a nice weather vane, and 4K has been our magic number, which coincides with resistance. So if we zoom out a little bit, you'll get a bit of maybe of a more inspiring picture. Look at these 4 hours. So interestingly enough, we may see 3 green soldiers up here to this 4K number for SPY. And then it's going to get very, very tricky. RSI will likely be overbought. We'll be at the trend. And of course, look at where we've come from, in terms of this greater trend. We tried to break out here, tried to break out there, tried to break out here. Do we break out here? It is the strongest we've looked, and we have busted through the RSI trend that was really keeping us down since April. So your basic technical perspectives say, from this, you would really start to target 4,100. And I know many analysts, their outlook is if we can break 4, then we start looking at 4,100. Then we start looking at 4,200, plausibly all the way up to 43, though we're getting a little bit crazy from this perspective. So if 4K can break, 41 is likely. If 41 and 4K, come, then I don't see why, Bitcoin would not find new highs, or at least local highs, I should say, of above 24.5, 25, potentially all the way up to this resistance level of 28. I do know some people very much like that as a magnet number, and of course we do have to understand that a lot of buys happened in 30K. Do we kind of magnet up to that because a lot of power players have average buys at that level? That's something that we have to consider. So we're really at a crossroads here right now. Like I said, this is likely to be consolidation before a big move higher or a big move lower. The S&P 500 wants to crank towards 4K. I think it's likely we probably see a pullback and kind of a consolidation in this zone, retap the moving average and then move higher. So if this comes off of 4K, Bitcoin plausibly cracks back down to 22K. I think that makes a lot of sense. And if we just continue higher for the S&P, then I think Bitcoin cracks above the 23.3 level, potentially 24, and continuing higher. A trade that we had in the Trade the Chain group this morning, based on S&P moving higher as we predicted before market open, was Ethereum hitting 1540 was my number. It hit all the way up to 1560. Then I said I would begin to look for shorts. Great short opportunity there. Now we're recalibrating, figuring out our next move. But this is why you join the Trade the Chain group. We had at 720, Ethereum 1540 target. A little bit of pain right there. But obviously very profitable trade in the morning. I believe, I know I took that. I know some members took that. I think Alex was in maybe a Bitcoin play as opposed to ETH. But we are hitting things very well in the Trade the Chain group. That is more or less because we are tracking equities very closely. And finally, the dollar is going to sit in this range for quite some time, I would assume. And any break lower would definitely equate to bullishness on the chart. A DXY moving lower, weaker dollar, buy more equities, buy more risk. If the dollar moves higher, stronger dollar, you can buy less equities and less risk. And look, this is at the median of its range as well. So anyone placing trades right now, bull or bear, is a insane person to me, because we are literally at the mean of the current trading range across many assets, and we've got to wait to really see what we can do, I think, from an equities perspective before we really start digging into saying crypto is going to move higher or lower. Personally, on a pie in the sky bet, I would say we move lower and then we crank higher. I really do like the idea of 22 before 25. But we did, of course, tag 23 today, which could mean some lows. So very tough to place a bet here, to be honest with you. What do you guys think?
Well, Nick, going back to yesterday's BTC and the daily sentiment, it was, I think, as high as 83, and it went down to 18. So again, if you're the person on the street and you're like, wow, this person sold and the selling was done already, therefore that won't impact the markets. That selling has already been affected. Now they're sitting on cash. One would think that's positive, right? So the sentiment fell off the charts. Is it because, like you said, there's these other large holders, Saylor and whatnot, that have the potential to sell? Is it more Elon specific that he's been so bullish on cryptos, especially Doge, and now he's out? Like, what do you think was the biggest driver of the sentiment? Because that was probably one of the biggest moves that we've seen over the last 2 years in sentiment. I mean, that's literally going from almost 100 to 0, right?
So in the context of Elon buying and selling, let me see if I can quickly pull up when that occurred. So I believe Elon bought, I don't remember if it was around here. I think it was, because if the average cost basis was around 30K and they took a slight loss on that, then then they would have had to bought early January of early 2021. Now he sold, they did their first round of selling, I want to say in like May potentially of 2021. I think that was around the number, and it coincided with a massive drop. And that was only when they sold 10%, and that was in the bull run. So our precedent is that when Elon sells, price drops, and that was only from a 10% run. That was when we were quite bullish, and you can see what that did. I mean, it literally just ripped us off a trend. I think we were already kind of coming off the trend, and that's why they sold, but it definitely exacerbated it. So if you're looking here, obviously, much different story when we're in a bear run, bear market, whatever you want to call it. And, we've got kind of, I know there's a lot of lines here, but you can kind of see tweezers. You can see a wick up here and a wick down here, a lot of uncertainty. So the perspective was, if a 10% sale resulted in a 20-30% drop, then a 75% sale should result in a much more extreme drop. And I think that was the idea. But because of where we're at, because we've already had so much selling, because I think the market was a little bit more easier to let's say push around without as much players and liquidity in it before, now we're obviously coming off of the highs, because if everybody's shorting into some news, you want to create max pain. And that's why we're continuing to say that I feel that 22K would be more likely than 25, just because we've got this overhang, because sentiment is so low, and because a big a quote unquote believer and inspirational personality in the market has now exited to a great degree. Even though he made his little quip about we may buy back in later, we're open to the idea. You still sold, you still haven't bought back. And a big belief system has kind of been cracked a little bit in terms of the crypto market. So when I see daily sentiment at 18, I take it with a grain of salt, because we want to buy lows. Whenever we see extreme lows, I want to buy that. But I don't know if I want to buy this just yet, because from a technical perspective, we just came off of the lows. I want to see how market makers react to this boost. And if we get some consolidation, if we get some strength, we get some weakness in DXY, then I want to buy it. But, two sides of the coin. Sentiment extremely low. I want to buy that. But because sentiment is so low and we've not seen a firm bounce, I'm not ready to buy into that just yet. And that's why Alex and I are firmly focused on the scalps up and down.
And I think that the $64,000 question with Tesla as well as MicroStrategy, are they rethinking, using these strategies as cash management or treasury, right? Now, are they saying maybe we shouldn't do this stuff? So it might be lip service from Elon saying, oh, we may do that in the future, but maybe these companies are saying, you know what, this not really is what we should be doing with our extra spare cash. So
I agree.
It's interesting because, well, one, I'm enjoying the memes that are coming off of this, particularly of the topless photos from his yacht trip in Mykonos. I love the one where there's a little Elon inside the big Elon, controlling it.
The Tesla torso, I think, is what it was called.
He makes us feel better about our bodies, that's for sure.
So the entertainment value is definitely there. But what this also, really solidifies to me is there was a lot of talk going back 3 and 4 weeks ago about the trustees of the Mt. Gox creditors and all the people there. And I believe that comes out to about 140 million in Bitcoin that are going to be handed back to them. And so everybody got really scared about the market impact of that. And, first you got to say, okay, not all those people are going to sell at the exact same time, right? So it's not going to be $140 million dump. Also, those people, I know they waited a long time, but God bless, it's like they went into a coma and were millionaires when they woke up. But the thing is, this just goes to show, it disproves the theory that $140 million Mt. Gox trustee disbursement is going to affect the market in any way. Really, I mean, you talk about the numbers that Nick was just throwing around with Elon, and it's a nothing burger. So,
yeah, I mean, it's one of those stories where initially sell, then it's like, he's open to buying, so there's some bullish perspective there. And then you start thinking about it, and you're like, wait, well, he's gone. Like, he's more or less gone.
Yeah.
They're still sitting, and then it's like, if Tesla is taking an L, and I think they made money on their initial 10% sale, so maybe like overall they're break even. But if Tesla's taking a loss on an investment that they made to create extra liquidity, what does that inspire anyone else? How does that help the narrative long term of Bitcoin being a store of value or worth holding on your balance sheet? Like if Tesla's selling at a loss, MicroStrategy is currently underwater, El Salvador is underwater. Who owns Bitcoin from that kind of perspective, from a store value, safe balance perspective? Who's winning?
Yeah,
no one. And that's something that we have to understand. It's tough to say, but it's true.
Well, I mean, it would be interesting to go back through the bond sales from sailors offering to buy.
They're $1 billion underwater right now. I think I posted that in the Trade the Chain community.
It's ridiculous. We're all heroes on the way up, right? So, all right, I want to get to another story that's just come out as of today, and this is a first in crypto and not a good one. A former Coinbase manager has been arrested on crypto insider trading charges. This is the first time the SEC has come after anybody for insider trading in crypto. So it's quite remarkable. It involves this gentleman here who was a product manager at Coinbase and part of the group that selected listings to go up on the exchange, as well as his brother and a friend out of Texas. So, this is an interesting case in that it's going to set a precedence moving forward. It means, this kind of behavior cannot go on, or at least happen in crypto. But Doug, I want to go to you. You and I have sat desk to desk on the institutional side prior to Trade the Chain. And what is fascinating, without naming names, are the exchanges that we would have in our conference room, going back to 17, 18, throwing spaghetti against the wall with some big brand name exchanges. And that's what everybody did on the street back then when, the market didn't go up to $3 trillion. And literally be like, just chatting around, maybe order some lunch and be like, oh yeah, we're going to list this coin next week, or we're going to list this coin next week, and it was just, it wasn't paid attention to like it would be at a TradFi investment bank. So now that this is really happening, it's crazy. I want to get your thoughts on it, Doug, because you've been in the traditional finance space for quite some time.
Well, this is why the retail investor gets so disenchanted with markets, right? They got disenchanted with traditional markets. Oh, it's HFT, it's algos. We can't beat these smart computers, right? And that's why the industry went from fractions to decimals, right? They felt that they were getting screwed on prices. So regulators came in, changed it for the benefit of retail. Obviously, they're trying to limit or reduce HFT trading. That really hasn't worked out, quite honestly. But now in this industry, in this ecosystem, crypto, retail felt like, hey, we got a shot, right? Like, yeah, there's some smart hedge funds in there, but we're not going to be front run by people, right? There's no insider trading. And now it's like, wow, newsflash. Like, really? Like, there's smart people now that are beating us to the punch. So it's just another reason for people to say, man, you just can't win in financial markets, right? There's always other people who have information faster than us that use it to their disadvantage or their advantage, right? That ruin markets, right? And this is why people say, this is a rigged game, a lot of financial services, and it creates no confidence in this ecosystem. So if there's one case that's going to be the poster child of regulation, we've been waiting for it. It's probably this, right? This is probably what brings in further regulation, which is going to be a good thing. But right now, retail is so fed up with this space, and rightfully so, right? I mean, you have companies that are supposed to be regulated exchanges. They're acting like idiots. Now you've got companies doing this where you've got inside employees getting their own benefit. I mean, it really doesn't speak volumes. And that will change, right? Again, regulation is a good thing. It's not a bad thing. But if we needed it, I mean, this comes out right now and it's like, wow, we definitely need it like sooner than later.
That's a good point. But the cautionary tale that I have is that it comes out too quickly, too abruptly, and too much of a blanket that smothers the innovation, right? Regulation's been slow to form as it is, but it doesn't need to just smother the industry. And that's the unfortunate thing. That's going to be the byproduct of things like this happening and bad actors in the space, is that we're really just going to get stymied from this point moving forward. But Nick, what are your thoughts?
No, I agree. I mean, every slip up that we make as an industry is going to be scrutinized and eventually put into writing in some way, shape, or form. And I think history tells us that unless you're on the side of, and of course, the issue here is, quote unquote, insider information. But we all know unless you're on the inside, you don't really benefit from the rules and regulations anyway. So it's a catch-22. And it's going to be interesting to see how it plays out, because look who's lobbying: Coinbase, FTX, these individuals. So, there's a good sign in the sense that you don't want over-regulation, but then there's a bad sign in the sense that look who's pushing regulation on both ends of the spectrum, both from an industry and a regulatory perspective. I don't trust either one of them right now. So the more slip ups we make, the more obvious we make it, the more nefarious these slip ups are, it's going to end up hurting, I think, in the short term and helping in the long term. And the only reason I say help in the long term is because we've said it before, clarity brings more money in, and more liquidity is how we make money. Long term, at least. If liquidity was continually drying up year over year, you would be investing into a losing market. If the liquidity is growing year over year, you are investing into a winning market. So the only good sign here is that if the regulators get something that creates opportunity, then there is going to be more of that down the road. But like Alex said, if it stymies competition, if it stymies the market, then that's cause for concern. So nothing to really say definitively right now, other than that the regulatory conversation is going to get a lot more heated. I think in H2, half two of the 2022.
As Gordon Gekko said, if you're not on the inside, you're on the outside. Of course, he only said that to Bud Fox, but still.
I mean, it's true.
Yeah, it is true. Interesting too. Gensler was on CNBC this morning with Andrew Sorkin, and Andrew Sorkin was really trying to bait him into some interesting conversation around regulation and particularly in what Gensler's thoughts were. But if you go over to CNBC.com, definitely check it out. That was an interesting clip. Also, Brian Hill in the chat. Talking about mining facilities in the U.S. and how they're offline due to high power costs and power curtailment. This is a real problem. I mean, this is something that we may discuss in a show in the next episode or two. Also, with the price action where it is, well, particularly back when it was in the $19,000 level, for smaller Bitcoin miners to produce a Bitcoin reward was running about at par. With the value of it, right? So, just put that in perspective. If an ounce of gold, how many ounces in a big bar of gold that they show in the robbery movies?
Well, I mean, there's 16 ounces in a pound.
Well, the big bars that they rob out of banks.
I don't know how many ounces are
I always forget that.
Well, a kilo is 1,000 ounces. It's called a kilo.
A kilo, okay. I should have called it.
Yeah, right. A kilo of gold, isn't that's typically how we measure it, right?
Doug, get Schiff on the phone.
There's other kilos too, but that's South Florida. That's a different kilo. Yeah.
That's where my knowledge comes from right there.
So it's trading at like where's gold at right now? Around 16 change or something like that.
I don't know. I don't track. Let's see, gold spot price is 1711.
1711. So you got to take Bitcoin is like gold. So you take that bar that they rob in the banks in the movies, which is trading around 1711 right now.
The bar is trading at 55K. An ounce is 1711. So a kilo is 55K. Depending on who you ask.
We're the worst gold show.
You are no Tony Montana, dude. I'll tell you that.
Don't ever listen to us about gold. So it costs about $17.11 on the market right now for spot for an ounce of gold. What it does cost to mine that ounce of gold is actually about $1,200. So if the price of gold ever went down to $1,200, nobody would mine it for a little bit. And that's kind of the case with Bitcoin too. And that's getting rid of any of the power outages or natural disasters that affect it. So
I think right now, speaking of like miner costs, it's funny. Bitcoin is very even with gold right now in terms of production costs. Coinbase Institutional did a report, and based on many averages across the globe around power and the difficulty currently, but it's about 13 to 15 grand at current prices. Now, this was before we started seeing Texas start to tone the energy usage down and things like that, but 13 to 15 grand is about what it costs to mine one Bitcoin right now. So
miners don't like that at 20K or 22K.
No. Oh, and that's why we're seeing miners are offloading a shit ton. I really do think that miners are going to be the signal of what happens next, because if they keep offloading all the way up, then basically they're giving the demand to the retail and the regular folk, and then we're going to get up there, and then it's going to be like, well, what's going on? Where's the demand? And then that's when we cascade down. That's what worries me, because miners are distributing a shit ton right now because they're doing what they need to do, which is create liquidity for a potential storm. Doesn't mean the storm's going to come, but Bitcoin's not going to be 50, 100K in the next 6 months. And a lot of them are debt fueled because they bought all of their mining machines on debt. So they have to repay debt.
No, you're absolutely right. I do believe that Bitcoin miners possess inherent risks to the market, the way things are going right now, and the way they're priced. And to Nick's point, they do sell off their amounts. Now they sell off Bitcoin that they mine to continue operations and pay for electricity bills and all the stuff that has to be bought in fiat. But here's an interesting thing too. Put in perspective the fact that we've had all these collapses with lenders. One of the things that miners have done throughout time is get loans on Bitcoin, so they don't have to give up the underlying asset and can and still own it during the appreciation phase. What are they limited in doing right now with the collapse that's just happened in the market? Getting loans on their crypto. So it's it's twofold. Now they're forced to sell it, so we could have more miners Bitcoin hitting the market rather than sitting.
The lower price goes, the more Bitcoin they have to sell per day to meet liquidity goals. So it's also another perspective. So price goes up, they sell less Bitcoin. Price goes down, they sell more Bitcoin. But rest assured, if it's costing them 13 to 15K per Bitcoin, they're maximizing profit right now as
100%.
much as possible because
And this is part of the fallout of New York State just not embracing crypto, right? They drove some miners to Texas and obviously hotter weather states. These guys would have been up New York State right now, cool conditions. New York State's just not friendly for crypto, obviously. So
there's two skeleton. I'm sure we've all seen that skeleton walking through the door meme. Where it's knocking off certain things. Still have Mount Gox, we still have miners, and we still have. And then we can still talk about. I don't even know if we want to talk about Grayscale Bitcoin Trust liquidations from the current people that are
the pledged
screwed.
collateral,
Celsius, 3AC, etc. What happens if GBTC is sold en masse? What does Grayscale do in that scenario? And how does that impact the market? This is probably a conversation for another day, but we still got 3 more skeletons for that closet to walk through.
Nick, I'm sorry. This is and this is why alone you and I discuss another leg down on a daily basis, because I firmly believe we have one coming. And I hate being a bear. I really do. I love when everybody just makes money. But I feel like we're walking a very tight rope right now where we could have some sort of next leg down for sure. But we all play and see, and that's life lesson.
We've been going back and forth on this, and I don't want to confuse people because I don't know if this bull run this run is over yet, because it's still bear market rally. We've still got very fair conditions. We still got another week for the FOMC, and we just look what we did in a week. So I don't want to say that this is over. And Alex and I have been discussing the possibility that maybe we don't see 17.5K again. That's possible, but it would shock me if we did not at least form. I'm starting to come off the idea that maybe a perfect W is not in our future, but I would be shocked if we didn't form an inverse head and shoulders. You know what I'm saying? Which means that we have, an elbow, that we have an elbow that goes, or a shoulder that goes back, a small head that pokes up, and then another shoulder, which could mean that 17.5 was the low. But just because we are bullish here and we don't expect to see the exact lows does not mean that we can't have another leg down to scare retail, to create a good buying opportunity, to have true capitulation and get, these skeletons in the closet behind us. Because
I think we're going to have good momentum going into the FOMC meeting because the news is ultimately going to be positive from them. And how is it going to be positive from them to the markets? It's going to be. I personally thought they should have raised 100 basis points the last time, ripped the Band-Aid off, but they're putting the second half of the Band-Aid on with this meeting. So I think we're going to be trading into some positive territory into that meeting. So don't look for. I'm not looking for a dump beforehand.
Yeah,
for sure.
And of course, Bitcoin having 2 down days after 7 up days doesn't mean the bull run's over. It could, but it doesn't. We're still on the uptrend, and we just broke through the most recent downtrend. So it's not out of the weeds yet, and we're definitely going to see some volatility up ahead, and it's probably still going to shock and hurt as these ranges do. But I think it is more likely than not to be bullish heading into mid next week than it is to be a complete bear as it stands right now. I would honestly, a double top at 24.5 would make me a very happy boy. But so would grinding up to 30K to see if Michael Saylor capitulates. That would also be an interesting perspective. So
you just want to screw with Sailor Boy.
I would imagine the smell in the market if Elon dumps 75% and Saylor takes a clip off. Like, even if Saylor took off $1 billion just to free up some liquidity, that would be insane volatility to trade. And we're traders, I know many people here are investing and we are believers long-term, but we do recognize that we are in an area where a lot of money can be made if you do it intelligently. And that's why I get excited about these things. I would love up only. But
yeah, no, I'm DCAing all day long at these
Yeah.
levels as well as scalping, and I definitely don't think leverage is going to be blown out of this little run until after the FOMC meeting. And what the time frame is after that, I have no idea. But I do believe the little leverage that is reaccumulated in the market space will be blown down again to as close to spot price as possible, and then we'll go up from there. In the meantime, we won't be rebranding to a gold show just yet. So don't be scared, folks. It will not be called Trade the Ounce next week.
can we get Peter Schiff on here?
He lives down the street.
That's what I'm saying.
One of the things I want to remind everybody, first of all, smash that like button if you haven't already. We do this for entertainment, but hopefully to educate as well. Also, don't forget about Nick's daily show on Trade the Chain YouTube channel every single day. The best free 15 minutes of your life, Monday through Friday, to really give you the markets in real time as they're happening in a short period. So thank you all for being with us. We'll see you tomorrow, and it is Friday tomorrow, so we're all going to be happier, I promise.